So this is for me is the way that I can store and save money in a vehicle that is providing me a constant payment, a recurring payment. And the main part of it is buying the right type of assets that are, you can use the leverage at your discretional, judgment, but also you need to know what they are doing with it and what kind of risk are you taking, because it's like always an equation about risk reward ratio. So it's liquid because I can sell it or I can rent it. And usually I can rent the place to different type of tenants. Before buying, you basically have to think about what is the purpose. What is the purpose of this location? What I want to do with it afterwards? And what if I'm wrong? What is gonna happen? Should I be able to get rid of it easily in profit? Or ready to go?
Ready to go.
Yeah.
Okay, you mentioned investing, which is a whole different topic, and I would like to go maybe into that. How would you define like investing? What is it for you? What does it mean if like somebody's like new to it? Like how would you describe it maybe in different areas of where you can invest, what you can do and so on?
Well, first of all, investing is a way to store wealth. So it's a way to saving your hard money that you work for, in other vehicles, other assets that they can potentially increase their value. Okay. And especially like I'm more focused on the ones that they also provide you a cash flow. For example, I'm focused mainly in real estate, and this type of investment for me is more like, okay, I hold the asset and I likely will keep forever. And holding the asset, I can get, something back, which is the cash flow that I get from the rentals. So this is for me is the way that I can store and save money in a vehicle that is providing me a constant payment, a recurring payment. And the main part of it is buying the right type of assets that are fitting my strategy and fitting my business model. Okay. Because of course, like real estate, like any other type of investment, has different like way of doing it. For me, there are people that are flipping, like they are buying off-plan projects and then they are selling them after they are handed over, so they are complete, and they make a profit out of it with the hope of making a profit because it is not guaranteed, And also, there are people that are just, buying for their own purpose, so for their vacation, but they want at least that the asset will increase in value at some point, because of course, like especially assets like real estate, stocks in general, they beat inflation. Especially if you think about stocks like indexes, they beat inflation. In fact, there's a reason why they keep increasing, because of course it's like the money gets printed, so get diluted, and also the asset, they basically follow this trend, So for me, investments mainly is real estate, also because it's much easier to get some kind of leverage. You can get some debt, so you can increase your buying potential, but also you can increase the level of return that you are getting from it. Okay.
Are you also considering your business like investment? Like you mean the company you have? Or this is like the work where you can earn some money, which can you then invest?
So I've always been very conservative about my company strategy. So I always been like risk adverse in my own business. So I always kept the business quite debt free. So I always work with my own cash flow, my own possibilities. But I always been more aggressive on my own side, So I need to take care of the people that I work with. And it's not like always a good strategy to do that. I mean, like if you want to grow fast, you need to use some level of leverage. I use leverage, so I leverage people. So I hire people to increase my capabilities and also my skills, because I cannot do everything on my own. But in terms of like risk, we never took like debt for pushing out of our boundaries. It could be possibly be wrong, because you can use the leverage at your discretional, judgment, but also you need to know what they are doing with it and what kind of risk are you taking, because it's like always an equation about risk reward ratio. Okay. So even when you buy real estate, you know that you can be wrong, but it's hard to be wrong in real estate, at least if you know a bit of it. Okay. And I would say that there are different rules that I apply in real estate, which are, the first rule is like the liquidity rule. So I usually buy assets like apartments in location that are liquid. Okay. So it means that I can tomorrow, if I'm tired of holding this asset or it's not working as I predicted, I can sell it. My strategy is actually renting it. So it's liquid because I can sell it or I can rent it. And usually I can rent the place to different type of tenants. Okay. So it's not only liquid in terms of I can rent it, but I can rent it to different type of individuals.
Okay.
So if one strategy doesn't work, I have the other one and I have another one.
But it's in the area of liquidity, because if you switch the location for some, I don't know, small village somewhere else, the situation will be totally different. Even if the apartment would cost the same, like the situation would.
Yeah, it's very difficult that the apartment costs the same if the liquidity is different, unless there is like some sort like scarcity or other variables that I'm thinking of. But the fact that you are buying in a place where there is liquidity is fundamental to be at least safer. So your risk reward is in a good position, okay? Because you can definitely have like some level of confidence that is going to work. And if it doesn't work, you can get rid of it easily without a lot of damage or even in profit. Because of course, depending on where you are at the cycle, the cycle of the real estate, in terms of also the economic environment you are in. If you buy in a location that is liquid, which is also location, okay? Location, what is a good location? Some people say a good location is something that is prime, but it's not always the case, because you can buy in future locations where there are big changes in the city, where they are building infrastructure, they are deploying, new new metros, new transports systems, or close to certain areas where they fit your
business plan,
your business, your business model. So before buying, you basically have to think about what is the purpose. What is the purpose of this location? What I want to do with it afterwards? And what if I'm wrong? What is going to happen? Should I be able to get rid of it easily in profit? Or would I risk it and I'm just attempting to make it right? So you have to study a bit of those things and be clear on what is your end goal, what you want to do, in your strategy, in your business plan, basically.
Because sometimes maybe if you have an offer which looks pretty nice and like good, you need to like check it if it's has the perfect location for your business model, because maybe it is cheap for buying, but then you cannot apply what you want because of, for example, students, or there are not so many students in that area of the town or something.
Yeah,
like that.
as you know, because you rented one of my place, my strategy is to rent to students, international ones, okay? And so I'm focused on that, and so I choose kind of a strategic location, which is like certain districts around or in where there is the Polytechnic or Polyme in Milan. So I know exactly what is my strategy, my business model. I know prices of that specific location. I know how it works, because when you are focused on a specific location, you start to get a better understanding of what are the prices, what are the best, streets, the best areas where you can invest, where are the future, plans of the district so you just focused on one area, so you must be you have a better understanding of it.